Welcome back to the Financial Desk for today's explainer. We've got a really fascinating one for you today, as we're objectively documenting PLAZM's internal economics on day 229. We are looking at one of the cleanest divergence days we've seen on the tape in months. We're going to track exactly how the protocol's internal yield engine is actually accelerating, even as the rest of the macroeconomic environment sinks. Real quick before we look at the data, please remember that this content is strictly for educational and informational purposes. It's not financial advice. Cryptocurrency investments are incredibly volatile and carry substantial risk, up to and including the total loss of your capital. So let's set the stage by reading the broader crypto tape. Over the last 72 hours, the market's Fear and Greed Index has taken a pretty sharp dive, dropping from 42 down to 31. This is a meaningful move deeper into that fear regime, signaling that a risk-off sentiment is really starting to take hold and push asset prices lower across the board. And you can see the direct impact of that fear regime when you map it to the major market assets. This risk-off sentiment is heavily dragging down the sector's heavyweights. Ethereum has dropped nearly 4% down to the 2180 level, and Bitcoin has fallen 2% to just over 78,200 in that exact same three-day window. Make no mistake, the macro tape here is undeniably red. But here is where a distinct upward decoupling emerges. When we pivot over to the protocol metrics, we see that while Ethereum sank 3.9% over the last 3 days, PLAZM actually climbed 9.5%, pushing up to 1.15 cents. The asset isn't just resisting the broader market drag, it's actively advancing against it. This is a stark deviation from the usual, highly correlated behavior we see in the crypto markets. Now, to really understand this divergence, we have to identify where that demand is coming from. And it's absolutely critical to note that the staking derivative, eSHARE, remained completely flat at $5.85 over this same period. That flat line is important because it confirms the upward price movement isn't just driven by derivative speculation. It's concentrated purely in fundamental demand for the underlying PLAZM token itself. Let's pop the hood and look at the vault. We're observing real asset accumulation taking place straight through this market dip. The vault gained over 7 additional ETH in just 72 hours, pushing the total up to 224 ETH. So, the protocol's underlying claim on the asset is actually increasing, fortifying its intrinsic backing, even though the vault's US dollar value dipped slightly to $488,000 purely because Ethereum's own price dropped. Okay, the headline data point today driving this entire decoupling is the daily yield from the bond pool. This metric surged a massive 60% in just 3 days, jumping from $425 up to $680.57. So while the rest of the market is hitting the brakes, this protocol's yield engine is demonstrably hitting the gas. The structural impact of that acceleration is incredibly clear. This aggressive yield engine activity pushed the bond APR up nearly 20 percentage points. In a 72-hour window, the rate shot from 31.6% to 50.83% APR. To put that into perspective, that's currently producing a daily payout of over 83,000 PLAZM tokens. That is a highly significant increase in daily value generation for bondholders. Examining the underlying bond structure shows us exactly how this momentum builds. As total bonds crossed 13,700, the self-funded buy and grow engine, which is the mechanism that automatically compounds protocol yield back into more bonds, accelerated by 62%. It's now churning out 3.82 new bonds per day. And here's the kicker. This represents self-funded treasury growth that requires absolutely zero new user deposits to sustain its operation. Shifting over to the supply mechanics, we uncover another critical layer of protocol health. Exactly 20% of the 13.78 million total PLAZM supply is now permanently burned. That means over 3.4 million tokens have been completely removed from existence. Meanwhile, the liquid supply sits tightly at 59%. This dynamic creates significant underlying deflationary pressure that really helps support the asset's valuation during a broader market downturn. And that deflationary burn rate is actively sustained by the buy, burn, and build, or BBB pools. Buy and burn lifetime spending climbed by $870, pushing the total historical spend to nearly $83,000. Even better, the active buy pool reserves, the actual USDC sitting there ready to deploy on the open market, saw a $460 increase. These reserves are compounding rather than draining out, which is a great indicator of sustained future buying power. Looking ahead, the forward release radar remains remarkably clear of any structural supply shocks. We're tracking only 2 minor unlocks for the upcoming week, both of them well under 40,000 tokens, scheduled for day 231 and day 233. There are absolutely no massive cliffs looming out there that could unexpectedly shock the liquid supply or suppress this current momentum. Which brings us to the definitive verdict for day 229. It is a pure, undeniable divergence. As the broader macro tape deteriorated and the market sank deeper into fear, PLAZM's internal economics, its daily yields, its real vault size, and its total bond count operated completely independently of that market sentiment. The macro went down, but the protocol went up. So the crucial question moving forward is this. Will these protocol-specific real yield mechanics continue to widen the gap and defy crypto market gravity in the days ahead? Because if these internal economics continue to compound, we may very well be watching the anti-fragile thesis playing out in real time. As a final reminder, this explainer is strictly for educational and informational purposes. The crypto markets are highly volatile and past performance doesn't guarantee future results. Please always do your own research and consult a licensed financial advisor before making any investment decisions. Thank you so much for joining me on the desk today and keep learning.